Welcome everyone to this SBM class. My name's Kieran Doe. I'm a senior tutor at ACA Masters and multiple ICAEW prize winner. In this class, we're going to focus on the exam technique to use in the SBM exam, looking specifically at a question that involves project evaluation and the use of statistics. After we've worked through a question, I'll then offer some general advice about how you should prepare for your SBM exam. So as I'm sure many of you are aware, there are two questions in the SBM exam. And they'll generally be broken down like this. There will generally be slightly more marks available in question one. So whilst on the face of it, it may seem as though there's just two really big questions, when you actually break it down and look at the separate requirements, you'll see there's like a series of smaller questions. So you can see here for question one, which was worth 55 marks, there's actually 4 subparts to it. So you can kind of break it down and look at these as though they're kind of individual questions. Yes, of course, they are on the same business in the same scenario, but the requirements are actually quite different. And we see the same types of requirement in every SBM exam. So if we take a look at the requirements here, we can see the first one is to provide reasoned advice to the Fresh Foods Board regarding which of the 2 retail stores should be opened. So which of the 2 retail stores should be opened, considering financial and non-financial factors, including the concerns raised by the FD, and this is all Exhibit 2. Then for the next requirement, we've got advise the board on how Fresh Foods should raise 20 million to finance the retail store by selecting a mix of borrowing from the 3 available methods. So that's more of a financial management financing type question, whereas this is more of a project appraisal, possibly investment appraisal type question with some business strategy considerations here with those financial and non-financial factors. Then we have in respect of the proposal to invest in the new delivery vehicles, we had to explain and evaluate the benefits and risks of investing in the new delivery vehicles and explain the FR treatment of the delivery vehicles. So again, more of an FM based question here, looking at the decision whether to invest or not, possibly with a bit of business strategy because we're looking at benefits and risks. And then we've also got an FR requirement here. And then finally, we've finished off with an ethics question. So we'll talk about this a bit more later on in the class, but these are typical SBM exam requirements. We'll always get an FM based question, FR based question, usually some form of data analysis type question, business strategy questions, assurance questions, and ethics questions. So you can see in question one, we have some FM based questions. So some on investment appraisal, some on financing. We've got an FR requirement, ethics, and like a project evaluation and some possible data analysis here. So we haven't got any assurance in this question, so that therefore must be in question 2. So it's important to appreciate that you can break the SBM exam questions down into these different types. So when we look at the question as a whole, what you'll always be given is the initial part of the question, just explaining kind of who you are, and it will usually tell us a little bit about the company in question. And then you'll have various exhibits. So you'll always have the first exhibit, which is the background on the company, and then you'll usually have 3 or 4 more exhibits. Now, as you can see from the requirements, question 1 relates to exhibit 2, or exhibit 2 relates to question 1. Exhibit 3 is question 2, exhibit 4, and then exhibit 5 here. So you can see actually that you have specific information for each question. So you don't need to go through and read every exhibit before starting the questions. The examiners lay the exam out in a really friendly way. And it's often the case that you can just read the first exhibit, the background, and exhibit 2 and answer this part of the question. So just answer this sub-requirement here. And then you can go on and read exhibit 3 and answer this part, and then read exhibit 4 and answer this part. And that will make you much more efficient overall, rather than reading through every exhibit, then looking at the requirements, and then kind of deciding, where you're going to start, or probably having to go back and read exhibit 2 again, because if you've read them all, by the time you've got to exhibit 5, you'd have forgotten what exhibit 2 was about. So it's just important to appreciate about the SBM exam, how you can break it down like that. And I'll talk a bit more about that later on in the class. So what I always do first of all is look at the requirements, look at the different things that we have to do, look at the exhibits, and then I'd usually do my mark allocation. So I kind of estimate how many marks each question is worth, so that I can allocate my time and make sure that I answer every question, because there'll be easy and medium marks on each question. There'll also be some hard marks, but I always think if I get the easy and the medium marks on each question, then I'll do really well overall. Better to do that than do really well on like the first 2 and then run out of time and don't answer these parts. So you want to make sure that you attempt every question so that you pick up those easy marks on each. So once you've allocated your time, and again, we'll talk a bit more about this later on, once you've allocated your time, you can then make a start on the question. So would have familiarized ourselves about what's in each exhibit. And of course, we know what the first requirement is. So we'll tackle this first of all, but we're looking to provide advice to the board regarding which of the 2 retail stores should be opened, considering financial and non-financial factors, including concerns raised by the FD. Now, it's really important you focus very carefully on the requirement wording so that you answer everything the examiner has asked for. And when we're answering the requirement, we want to use the exam paper information, the scenario, as much as possible in our answer. We don't want to give kind of generic answers where we're just reciting technical knowledge. We want to make sure we're applying it to the scenario as much as possible. So focus very carefully on that requirement wording, and consider even using these as headings in your answer to keep your answer really focused. So having already got a feel for the exam paper and looking at what we have to do, you can then start reading through the scenario, and we'll now be able to read it a lot more actively because we know what we're kind of looking out for. We know what the requirements are. We've already thought about which parts we'll read now. For now, we're only going to read the first 2 exhibits, the bits that we actually need to answer the first part of the question. We'll look at exhibit 3 when we get on to question 2. So for now, we just need to look at these few parts. We know what we have to do for the requirement. So now as we read through it, we can kind of identify what's likely to be important in our answer. So assume the date is 1st of July 22. So Fresh Foods Limited is an online food retailer selling goods direct to consumers. Fresh Foods does not currently sell goods via physical stores. So it's an online food retailer. You are an ICAEW chartered accountant and you have recently joined Fresh Foods as an assistant manager in the strategy department. Your line manager has asked you to meet him. So he's opened a meeting. Fresh Foods has undergone significant growth since 2020. I know that you are new to the role, so I've provided you some industry and company background. So we can see here we've got the background information, and this is typical. Usually this first part just kind of tells us who we are, what our role is, and it usually just kind of almost recites the requirements again, or at least tells us kind of what's in each exhibit, which we've already kind of gathered from looking at the requirements. And then the first exhibit is usually company background. So we'll get used to the structure of the questions. So Fresh Foods has undergone significant growth. So here's the background information in exhibit 1. To support the next phase of growth, Fresh Foods has recently appointed a new CEO who has asked me to look at several issues and to report back to the board. I would like your help. Up until now, Fresh Foods has only sold goods via its website. However, it is clear from customer feedback that most customers would like to visit physical Fresh Foods retail stores. Hence why that first question is all about potentially opening a store. As a result, the board is considering 2 alternative sites, as we've seen, for the first Fresh Foods retail store. The directors recently held a meeting to explore this matter further, and a wide range of issues were raised. And we kind of already knew that's in Exhibit 2 because that's what we gathered having looked at the requirement. So you can kind of see how this first bit just kind of almost summarizes or repeats what we kind of already gathered from the requirements. Now it says the board have also considered how it will be financed, and the finance teams have set out the available sources of finance in Exhibit 3. So we know that's for a later part. I'm not going to focus too much on that now. And you can see this as well. They're just explaining a bit about the other parts of the requirements. So looking at the investment in the new vehicles. So we'll probably just kind of skim that for now. And then we've got this ethics issue here. And this is just telling us that the instructions of what to do are all in that final exhibit. And that's where they usually are. However, sometimes what the examiners might do is have this requirement, rather than having all the requirements at the end, they might actually include them within the exhibits. So in Exhibit 2, at the end, they might actually have the requirement here. And then at the end of Exhibit 3, have this requirement at the end of the exhibit there. Doesn't really change much in terms of your approach, but it's just something to be aware of. So as I said, we'd usually get some company background. So we're told when the company was established, so 2016, to provide food products sourced directly from UK farms. Fresh Foods supplies a range of food products, and we've got a few examples there, to the end consumer. So we've been told this a few times, that they provide it to the consumer and that they operate online. So industry and markets. So the food retail market is highly competitive. Price is a key element of competition, and the market includes large multinational retailers who benefit from economies of scale, as I'm sure you are aware and have some understanding of this industry. However, the examiners will, of course, always include all the information you need for the question. Despite this, niche markets continue to exist for businesses with specialized products or a unique offering. So perhaps this is going to be fresh food because they're sourcing directly from the farms. In recent years, consumers have become increasingly conscious about the health issues surrounding their food choices and the environmental impact of food supply chains. There has also been increased desire to support local farmers. As a result, there is a growing trend for consumers, particularly those with high incomes, to purchase products from small local suppliers, despite prices being at a premium to the large retailers. So that's perhaps explaining about one of those niches. So perhaps this is going to be where Fresh Foods operates. So business model. Fresh Foods sources products from 227 farms across the UK. Fresh Foods sells products via its website and delivers the goods direct to the customer via its 24 distribution hubs. So maybe some key figures there, which might be relevant. By working with a limited number of farms and only sourcing UK products, Fresh Foods supply chain and operations are considerably smaller in scale and scope compared with the large retailers. This enables Fresh Foods to reduce the time it takes for products to reach the end consumer. So we can see that they're considerably smaller in scale and scope, and this enables them to reduce the time it takes to get to the end consumer. So perhaps this is going to be, as we were told here, we've got these, niche markets. Maybe that's where perhaps they are operating. A key aspect of Fresh Foods marketing strategy is a promise that all products will be at least 3 days fresher than equivalent products purchased from the large supermarket. So that's part of their marketing strategy. Also, as Fresh Foods sources all its products from the UK, the environmental impact is considerably lower. So we can kind of see the benefits there. So financial results. So in the year ended 31st March 22, Fresh Foods operating profit grew 75%. So it's clearly performing very well to 65 million. This is following growth of 133%. So of course, it's a fairly new business. So you perhaps might expect higher growth initially because you'd be starting from a low base point in the previous year. Growth has been predominantly due to an increase in the number of customers. So it's kind of like volume driven by selling more, although there have been price increases in line with food price inflation. So it's mainly because they're getting more customers rather than increasing their prices that's driving this profit growth. Such price increases have enabled Fresh Foods to pass on increased supply costs to the consumer and escape the profit margin squeeze faced by most retailers. So it sounds as though suppliers are putting prices up, but Fresh Foods is able to pass them on to the consumer. So it sounds as though they perhaps really are operating in a niche because most other food retailers are having to absorb some of these costs, is what it seems to be suggesting there. So then we got onto the exhibit. So this would usually kind of form some background to kind of all of the requirements, because this is the background part. And this is the bit we're specifically looking at in that first question. So as part of our regular customer engagement process, it's clear that our customers would like the option to visit a Fresh Food store, as this will enable them to physically inspect the range of products on offer and speak with staff in person. So this is some of the benefits from having that store. So of course, perhaps maybe we'll mention that when we're looking at here our financial and non-financial factors to consider. Maybe we should take this into consideration. Research indicates that customers are prepared to travel up to 15 miles to visit a Fresh Food store. So customers will travel 15 miles. The board have therefore decided that Fresh Foods should open its first retail store by the end of the year. So it could be an important date, and we can think about whether those timeframes are realistic. 2 alternative sites have been identified, Manchester and London. Both sites are located on the edge of the city, as this will ensure goods can be delivered to the stores in the shortest possible timeframe in order to maximize freshness. So it sounds as though we have to choose between the two. It said several times, these are 2 alternatives. So that on that basis, they sound fairly equal because they're both on the edge of the city. So we're told that the board will assess the success of the first store after its first 12 months of operation, and will then decide whether to open additional stores. So it sounds like a sensible approach. The marketing and finance teams have provided the following information and estimates for the 2 sites. So we've got Manchester and London. And of course, we have to advise which of the 2 stores should be open. So we've got option 1, Manchester. So we're told that 9% of Fresh Foods customers are located within 15 miles of the proposed location. Now we're told that research indicates that customers will travel up to 15 miles. So 9% of Fresh Foods customers would be located within reasonable travel distance of the store, or the distance that they're prepared to travel to get to the store. The site would be leased under a 6-month lease with the option for renewal. So we're told total annual fixed costs, including the rent payable under the lease, will be 3.8 million. So it's going to be leased under a 6-month lease, but we're told the annual costs are going to be 3.8 million. So it must be 2 lots of that lease. To estimate the additional contribution that will be earned from in-store sales, so now that they have a store, the marketing team analysed the historic financial results of 11 profitable retail stores in the region, which were still operating a few months ago, or 6 months ago from today's date. The results were as follows. The mean estimated contribution per year is this. So revenue minus variable costs are this. So it says they've got this data. So to estimate the additional contribution that would be earned from selling in the store, because we know the fixed costs. So we need to know the contribution, the revenue minus the variable costs. So we're told that the additional contribution that would be earned from selling some goods in this store is going to be set up. The marketing team analysed the historic financial results of 11 profitable retail stores in the region. So we'll come back to this, but we definitely want to be skeptical about, some of the data perhaps. Now we're told the estimated contribution is this. Now we're also told there is a 68% probability that contribution will be between 4.15 million and 5.65 million. And we're told that the standard deviation of the contribution estimate is this. So clearly some statistics in here as well that we're going to need to consider as part of our answer. So if you have a quick look at the London information, and we might think about how we might draw our calculations up here, we're told that 14% of customers are located within 15 miles. So actually that might make London more attractive because there's more customers within the 15 miles that they're prepared to travel to the store. Customers in this region have the highest income of all UK regions. So actually, remember we were told above here, particularly those with high incomes are looking to purchase from, small local suppliers. So, that's certainly, relevant there, and would factor that into, some of our non-financial factors. The site would be leased under a 6-month lease with the option for renewal. So that looks the same. So we're told that the fixed costs, if it's going to be London, including the rent, are going to be 6.4 million. So, considerably higher. To estimate the additional contribution that will be earned from sales, the marketing team analysed the historic financial results of 8 profitable retail stores in the region, which were still operating at this date, and the results were as follows. So they've only looked at 8 retail stores in and around London, whereas for Manchester, they looked at 11. We're told what the mean estimated contribution is per year. So again, looking at that contribution, we've got that there. And then we're told some other information about, probabilities. So 50% probability that it will be between this and this. And again, we're told, what the standard deviation is of that mean contribution. So again, we've actually got the same information here, albeit different for the different option. So we've got the finance director concerns, and we were told to comment specifically on this. The finance director raised the following concerns. By operating as an online-only business, we have reduced operating risk by minimizing fixed costs. So yet we know they have been an online-only business, and of course, as you'd expect, they would minimize fixed costs by not having stores, for example. This has enabled the business to increase profitability rapidly. Now we're told that opening a physical retail store will significantly increase fixed costs and increase the likelihood of a loss being made if there is an unexpected downturn in sales. So of course, if they now have fixed costs, then of course, if volume drops, they're still going to have those fixed costs. And therefore that does increase the likelihood of a loss being made. Whereas at the moment, they have very few fixed costs. So even if volume decreases, they haven't got many fixed costs to cover, or as many fixed costs to cover. Based on the research provided, I would like to know the probability of a loss being made by both sites, as this should be considered when making the decision as to which site should be selected. So I'd like to know the probability of a loss being made by both sites, so we can think about that. So once you might just want to just refresh yourself, on the requirement. I do this kind of several times just to make sure I answer that specific question that the examiner's asked for. Reasons advice to the board, which of the 2 stores should be open, consider financial and non-financial factors, such as statistics, including the concerns raised by the FD. So we've kind of got the 2 sites here. We've already thought about, some of the points we might make. Now, this is, a common type of question in the SBM exam. When we're looking at financial and data analysis, we could be looking at performance analysis, so looking at how business has performed year on year. They've actually done some of that analysis in this question. We could be looking at variance analysis, Or we could be looking at kind of just a more general, proposal, a financial appraisal. Now, of course, it could be structured as like an investment appraisal where we're told the cash flows and a discount rate, and we can kind of discount them down that way and do an investment appraisal type assessment of this potential project. However, that isn't quite where we are with this question. This is kind of a bit more general. We're not told about cash flows. We're not told about discount rates. We're actually just told some more kind of general like profit information. So that's what we're going to have to work with here, because we're told contribution, we're told fixed costs. So we can look at kind of what the profit would be for that first period. So what you want to make sure that you do with these types of questions, I mean, we usually want to calculate, revenue, costs, and profit. Of course, the question isn't quite structured like this because we're just given contribution. So we've kind of got the two sites. We've got Manchester and London, and we're not given revenue and costs. We're just told contribution, then we've got the fixed costs, and then we can get down to the profit. So of course, just remember, contribution, full name, contribution to fixed costs and profit, revenue minus the variable costs. So we're told what they are for each site, so we can calculate the profit, and we can look at the profit margin, and we can think about what we do know about any of the costs which are provided. But we've got Manchester here as option 1. So we're told that the contribution is 4.9 million. Fixed costs, so we've got the annual fixed costs of 3.8 million. And then we can get down to our profit. And we always want to look at the profit margin, but we'll look at that when we've got both sets of numbers there, perhaps. And then London, we were told this was the contribution 7,867. And then we had the fixed costs, which were the 6.4 million. So then we could calculate the profit there, and we can see London's greater in size, probably because there's more customers around there, and obviously a bigger city. So then you could look at the profit margins, and you can see that London's actually lower, so it's actually larger in absolute terms, but it's got a lower profit margin. And that's something to always look at when you're calculating profit. Look at the margin. And then whenever you're looking at a project, try to kind of compare the size to something else. So you could compare it to existing activities, so the existing business, and that's something we can do here. Maybe you've got some information in the scenario about competitors or the market overall. Maybe they'll tell us what average profit margins are in the industry. It depends on the question. In this one, a really good comparison, of course, is between the two, because we've got two options. So you can compare the profit margins there between the two. And like I said, you could also look at it based on existing activities. So I'd probably start off with some fairly basic analysis, give the headline results, and then look at the differences between the two, because we can see here you could work out exactly how much bigger London is than Manchester. So we can see here that it's got higher contribution by 60.5%, but that'll obviously be much lower in profit terms because it's got that lower profit margin. So you could start off with that first of all. So we'd give our answer a heading and just make sure we answer everything that the examiners have asked for. But this is of course part 1.1, and we're looking at here retail sites. But we could say, first of all, just give the headline numbers. So we can say London has higher contribution and profit in absolute terms. And then we could put those numbers in. So you could put 60.5%, picked up there, 60.6% higher, more than Manchester, and profit in absolute terms. But then you could say, however, profit margin is higher for Manchester, And then again, we could just put in brackets there to compare the two and make sure that we give the numbers. So as we worked out there, it was 22.4% versus the 18.6%. And that's probably, kind of due to the fixed cost, but maybe we'll comment on that there. And as I said, it's always useful to look at, how does it compare to existing activities? Because of course we were told that in the scenario. We were told in the scenario that they've got profit of 65 million in total. So you can kind of see how much do these projects add to existing profits. So you can see actually they're going to be quite small, given the overall size of the business. And that's probably what you'd expect, given that they're mainly online business and this is the first store. So we could say here, the new store will add little to existing business. But of course, we could always, and you could put the, percentages in there as well. I won't just go through and type them all out. You could put the percentages in there as well. But of course, there would be the potential to expand. So other useful, points to mention, as well as comparing the size, you can do that with revenue or you can do it with profit. Obviously, in this case, we've only got profit. We haven't actually got the revenue. You could consider it in the performance of the existing business. So you could say something along the lines of, this is an opportunity for the business to keep growing and capitalize on its growth. Although that's probably more relevant for when you're deciding to go ahead or not. This is kind of like a choice between the two. You could think about new revenue streams or additional revenue in the future. We've said London's higher, but as we've already picked up, and as I've said before, use a scenario as much as you can. We were told here that more customers are in and around London and they've got higher income. So therefore, there's probably more growth potential around London because we know that it tends to be higher income groups that use fresh foods. And of course, there's more customers located around there. So we could say growth potential likely to be higher for London because more customers, and again, you put that 14% in proximity and also higher income, which is fresh foods, and you could abbreviate the name like this, fresh foods, target market or existing clientele. You could perhaps put there. You can see kind of short, concise, range of points, keeping it really focused on the scenario, comparing the two. If we think about costs, we could say as well, there's more risk here with London because there's a more fixed costs. So you can say London has greater risk due to higher fixed costs, increasing operating gearing. And of course, that's a concern specifically of the finance director. So it's definitely worth pointing out there that London adds more to that risk. So all kind of useful points to consider. Obviously, it depends very much on a scenario, which points are relevant. These are just kind of some useful, reminders to kind of get your mind thinking, help you generate ideas. But I always like to think, revenue, profit, and cash. Now, we're not told much about cash. Presumably, there's going to be, a reasonable outflow initially before they start making sales. You consider the current cash position of the business if we have the balance sheet, if we have the SFP, which we weren't told that in this question, so we don't actually know whether they've got enough cash, but that's another consideration as well. So, how much revenue is it adding? And you can look, how does that compare to the existing business? You can look at, the profit, look at the margin, analyze the profit margin. I think cash, I always think, revenue, profit, cash. And of course, cost is, part of that profit calculation. So in some other, useful points to consider, obviously, these are quite financial points. If you're looking at a forecast, forecasts are inherently uncertain. So it's worth mentioning that. And if you're looking at, historic information, then of course, past performance is, an indicator of future performance. Now we're going to question this data quite a lot, but we can see here that this is based on the historic financial results, of other retailers. So, we should question, how representative is this data? But first of all, it's based on historic information, so that could be quite dated. So you could say, always tailor this to the scenario as much as possible. This is just kind of things to think about when you're looking at kind of a proposal. These might be some relevant points, and this, of course, is. But you can say, past performance of other retailers may not be an indicator of future performance, or relevant to fresh foods, especially because fresh foods is different, or is a differentiator, and not similar to typical retailers. So again, that would be an example there of how you could question some of the data and why that might not be realistic. Identify any key numbers. So obviously the fixed costs are probably a key number there. We don't have a huge amount of numbers kind of going into it. So this might be more suitable when we've kind of got, more numbers kind of going into it. You could, possibly mention, the amounts aren't accurate, then they could be quite different. Try to identify any missing costs or revenues. Again, it seems as though we've got everything. You could possibly mention that by having a store that might also boost online sales. This is only considered in-store sales. Could possibly, mention that point. You certainly want to question any assumptions that have gone into it, or identify some bias in the data. And then we'll think about statistics as well. So if we look at, some of these assumptions, as we've already said, one, they're looking at historic financial results, but also they've looked at 11 profitable retail stores in the region, which were still operating at the most recent calendar year end. Here they've only used 8, so it's not kind of clear why less were used. So we could say here, in terms of the data, not clear why only 8 stores used for London data, versus 11 for Manchester. Now you could also start to think about some specific types of bias that we see in data. So one of these, for example, is the fact that they've only looked at profitable retail stores, so they haven't included any loss-making ones, and they've only looked at ones which were still operating, at the most recent year end. So they've omitted any loss-making retail stores, and also any retailers which have gone out of business. So therefore, the data is, biased, because it's presumably focusing on the more successful ones. So again, we could make that point. We could say data only uses profitable stores, and so we could use a specific term here, but one of those is survivorship bias, because some of the data has already been used, because some of these businesses, some of the data has been completely ignored, because it's only looked at businesses which are still in business, not ones which have gone out of business. So only uses profitable stores and includes survivorship bias, because has ignored any stores which no longer exist. So you can say gone out of business. So again, you can see some obvious bias in the data there. You could probably think of more as well, but we want to kind of get as many points down as we can, and obviously it's very time pressured in the exam. So clearly the examiners have led us here to some statistical work. So this is not new for 2022, but was introduced in 2021 and is going to become increasingly important in future exams. So very important topic for the SBM exams in 2022. So as we've already seen, we've used an average here. So we're told that the mean estimated contribution is this. So they've looked at the other retail stores, and they've estimated that the contribution per year is this. So they've taken an average. Now, whilst the average, it can be useful in some respects, it hasn't really looked at the underlying data. So to give you an example here, if we're looking at Manchester, now we know they looked at the historic financial results. Now we don't actually know what the underlying data look like. All we know is this is the average. Okay, so we don't actually know what the underlying data set is. They looked at these 11 retailers. Was it retailer 1, 2, 3, 4, 5, 6, all the way through to 11, or did they look at it over, a number of years, or kind of a combination of the two? We don't know what the underlying data is. What we do know, this is the average. Now, the issue with the average is you could get this average for a lot of different data sets. So to give you one extreme, if every retailer every year made 4.9 million, then clearly we'd be quite confident that this is what the store would make. Whereas you could also get to an average of this if these were the profits. So very low profit, quite a high profit, then a loss, then a really high profit, then another loss, negative contribution. So you can kind of see there could be much greater variation in a data set and still end up with this as an average. So therefore, that's why it's important to look at the variation in the data, as this will indicate the risk. Obviously, if this is the underlying data, there's much more risk here than if this were the underlying data. And that's why we would look at the standard deviation. So of course, here you can see, these are two extremes, of course, there isn't any deviation here in the data set. And here there's a great deal of deviation. So that's kind of one extreme, to the other. But hopefully you can see from this why considering the variation in the data set is important, and more variation is going to indicate more risk, whereas less variation, there's less variation in the data set. And therefore, if you're using an average, there's a lower chance it's going to be away from that mean. So we're told in the question that the standard deviation for Manchester was this 750k. So the data set may have been, something, like this, and therefore, these were the two extremes, and actually, there is some variation, but obviously not as dramatic as it perhaps could have been. Now we're told the standard deviation for London. So we've got, the average here for London. Again, we don't know what the data set is, and I could show you, two extremes, just as I did there with Manchester. Perhaps it would be this every year, and therefore there's no variation, or there could be, significant variations. But we're told that this is the standard deviation here. And therefore you might look at that and think, okay, well, clearly London is higher risk because it's higher deviation there compared with Manchester. And therefore you might think that initially. However, if you look at the London values, the values are higher. Manchester, as we know, the average is lower, and the values are therefore lower in that data set. So actually, of course, the standard deviation is going to be higher because we're dealing with numbers of a higher value here. So this is where we would then look at the coefficient of variation, and therefore we would just take the standard deviation and divide it by the average. So you can calculate the average and the standard deviation in the software using the functions, and then you can calculate the coefficient of variation. And actually you'll see that it's lower for London. So actually, once you've adjusted for the size of the values by looking at it as a relative measure, as a percentage, rather than looking at it in absolute terms, then you'll see that London actually has lower variation, and therefore there's less chance of the contribution varying significantly, from the mean. The variations are less significant there. So hopefully, that's, quite clear in how that works, and hopefully that kind of brings it to life a little bit by looking at that example and thinking about a bit more specifically there how it applied to a scenario. So you could say, London has higher standard deviation, which appears as though it has more variation in contribution, and therefore more risk. Then you could put, however, need to adjust for size of values by using coefficient of variation. Then you could put London has a lower coefficient of variation. And of course, we've got the amounts there, so you could put the percentages in 13.7% compared with Manchester, and then we could put the percentage in for Manchester. And you can say this shows that London has lower risk as less variation in data set. So of course, we can copy all of these, as we go through. I mean, these were just theoretical examples. Just put your numbers in, make sure you copy them across to the word processing area. Of course, I did my workings here for the profit, which fed into that first part. So hopefully that gives you some clarity there on how those areas of statistics work. So the other part that you need to be particularly aware of is looking at probability distributions. So looking at kind of certain values, certain outcomes, and the probability of them occurring. So when we look at the distribution of the data, you should try to identify whether it follows a normal distribution. So what we mean here by normal distribution is we're looking at how the data is distributed. So what we have here is the mean. Now, if the data follows normal distribution, then there would be a 50% probability of the amount, so the contribution in this case, we know the mean. If it follows normal distribution, so all of the different various points, now we obviously don't know what the underlying data is here. Now I said, these are all kind of various examples of what it could be. We don't actually know, what it is. Now, if the data follows normal distribution, then 50% of the values will be above the mean and 50% of the values will be below the mean. Now, there are lots of things in real life which follow normal distribution. A good example would be the height of individuals. So for example, if we took the height of females, for example, perhaps, the mean, I'm just guessing here, would be 5'7", perhaps 5'6", 5'7". Now, if you think about if you took everybody's height and you kind of plotted it along, then most people will be in and around this. Now, you'd have the average, you'd have a certain, half would be above it, half would be below it, but most of the values would be in and around the mean. Most people are kind of quite close to that, 5'6", 5'7". It's very few people we have who are, 7 foot, for example, or, maybe 3 foot. So you can think about, that as a good example of following normal distribution. And that's, an example. I think it follows normal distribution, but you can think of, lots of other examples as well. Another one, as you might be aware of when you're in, accountancy firms and you do your performance review every year, then, certainly the firm I was at, we had a grading of, 1 to 5, and, most people would be a 3, in the middle, and there'd be very few people that were a 5 and very few people who were a 1, and then you'd have like a 2 and a 4 here. And they always said, it need to follow kind of the bell curve, because that's the kind of distribution pattern. So that's another example there of normal distribution. You could think of lots of other examples and lots of examples available if you have a look online or on YouTube or wherever. So what we'll want to know is whether the data we're looking at follows normal distribution, because if it is, we can derive what a probability of a certain outcome will be. So if it does follow normal distribution, as we said, 50% of values above the mean, 50% of values below the mean. So what this shows, and as you can see here, is that 34.1% of values are between the mean and within 1 standard deviation of the mean. So we're kind of measuring the range using a standard deviation. That's kind of like our tool, our measurement tool to say where values are. So of course we know with Manchester, for example, the standard deviation was 750. So we know we've got the mean here, which is the 4.9 million. And if it follows normal distribution, then we'd be able to say that the 4.9 million plus the 750K, so 5.65 million. So between the mean and the 5.65 million would fall into here. And if we took the mean and subtracted the 750K, which would give us 4.15 million, 34.1% of those values would be, in here. So that range would be in there. So you can see here, and therefore, if we know that 34% of values fall between the mean and one standard deviation, and 34% fall between the mean and one standard deviation below the mean, so 34.1% between the mean and one standard deviation above it, 34% between the mean and one standard deviation below it, then obviously one standard deviation below the mean up to one standard deviation above the mean is going to contain 38.2% of the values. And then you can make similar observations when you look at other data as well. So looking at 95.4% of values are between 2 SDs below the mean and 2 SDs above the mean. So you can see here that you've got 95.4% of values are between here and here, and therefore the difference 2.2 are going to be less than 2 standard deviations below the mean. So very few values are going to be that far away from the mean, and similarly at the other end of the spectrum. But we'll see how this works. I think it makes a bit more sense when we actually look at some numbers. So we know this is how normal distribution works. So when we're told information here, so we're told here there's a 68% probability that the contribution will be between this and this, and we're told what the standard deviation is. So actually, when we know this, what we can do is we can assess whether it follows normal distribution. So actually, you might kind of recognize this number, straight away, and we're looking at 68%, probability. And if it is normal distribution, then you'd expect 68% of the values to be between one standard deviation below the mean and one standard deviation above the mean. And as I had already said, we've got the mean here, and we know that one standard deviation below it would be this, because we've got the average, and that's one standard deviation below it. So that's one standard deviation below the mean. And then we've got, one standard deviation above the mean, which of course is the mean, plus the standard deviation. So for 150. And we can see now that's what one standard deviation is below the mean. That's what it is, one standard deviation above the mean. And therefore, if it follows normal distribution, then we'd expect 68.2% of the values to fall between these two. And actually, if you look here, you can see that these are the values that they've given us. So actually what this is telling us is that it follows normal distribution. This data, whatever the underlying data is, it does follow normal distribution, because we're told here 68%. And when we look at these values, that one is one standard deviation below the mean. And you can see that quite simply by looking at the numbers here. This is the mean, that's the standard deviation. So this value is one standard deviation below it. So this is the 4.15 million here. That's the one standard deviation below it. And then we've got the one standard deviation above it, which is 5.65 million. So actually this was a relatively easy one, and we wouldn't expect them to be too complicated, certainly for the first few years. But you can see here that clearly we've got these two values. Now we're told with the data we're looking at, we're told that 68% of values fall between here and here. And of course, we know that's in line with normal distribution. because we know with normal distribution, one standard deviation below, one standard deviation above, that's where 68.2% of the values fall. So therefore, we know it follows normal distribution. Now, this is useful because this then means we can calculate the probability of a certain outcome. So what we could say, first of all, is Manchester data follows normal distribution as 68% of values are between one standard deviation below the mean and one standard deviation above the mean. So that's why they've given us this information here in the question. So we have that there. So once we know that, what we can do is we can actually calculate the probability of a particular outcome. So you might think, what type of outcome, should we calculate? Well, remember, the FD said that they wanted to know what's the probability of a loss being made. So if we think about Manchester, okay, so how would a loss be made if we're looking at Manchester? Well, of course, we know with Manchester that the fixed costs are this. So in order for Manchester to make a loss, contribution would have to be this or lower, because we'd have this is the contribution, then we'd have the fixed costs, which of course, would then, contribution would have to be 3.8 million, then you had the fixed costs, and then, profit would be 0. So if contribution was below 3.8 million, then Manchester would make a loss. So we kind of already know some information about the contribution. We know there's a 68% chance of it being between this and this, but actually what we want to know is what is the probability of contribution being 3.8 million or lower. Now, the way we can calculate that is by using a Z-score. So all this is doing, all the Z-score is showing is how many standard deviations above or below the mean a particular outcome is. So yes, we know that there's a 68% chance that it'll be between here and here, but what we want to know is what's the probability of it being 3.8 million. So the way we can do this is take the particular outcome which we are interested in finding out. So we're interested in an outcome of 3.8 million, and we know that the average, so the mean, as we'd already worked out above. So the mean for this one, that was the 4.9 million. So we can look at the 4.9 million, and then we can work out what the difference is between the two. And then just divide that by the standard deviation, and that will give us what we call a Z-score. So we know that the standard deviation, I think for Manchester, wasn't it? It was a 750, and therefore we can work out what the Z-score is. And then we've got that Z-score there of 1.47. So what we would then need to do is to take this Z-score, because we know that's 1.47 standard deviations away from the mean. So we know we've got the mean here, which is the 4.9 million that we have here. So we've got the 4.9 million here. That's as the mean contribution. But what we're interested in working out is where is 3.8 million on here. So we'd expect it to be kind of, around here somewhere. So even kind of looking at this, you'd probably get some sort of estimate of what the probability would be. But of course, we want to be exact, we want to be specific. Now, we know that it's 1.47 standard deviations away from the mean. So it's going to be somewhere, around here, somewhere, halfway between the two. So of course we know, it's not going to be half of this because there's more probabilities there, but it might be something like, 5 plus, 2.1. So it's going to fall, what's the probability of contribution being between here and here? It's going to be, that's a very rough guess. It's going to be like 5 plus, 2, maybe about kind of 7% or something like that. But we're going to work it out exactly, but just so you can kind of think, roughly what it is, and then you'll know whether your answer is sensible or not. So the way you look up the exact probability would be using the distribution tables. So a Z-score of -1.47. So what this is showing is the probability of each particular outcome. So your Z-score could, of course, be negative, or it could be positive. So, this is, no standard deviations away from the mean. So this is, the mean, and therefore there'll be a 50% chance of it being this or greater, and a 50% chance of it being that or lower. So you'll see that as you get further and further from the mean, the probabilities decrease. So we're looking here. So for example, if we were looking at a Z-score of 1 standard deviation away, then you can see there's like, a 16% chance there. So again, if you added these up, so 1 standard deviation away or, less, so less than, you take the mean, if you're going to be less than a negative standard deviation away from the mean or lower, then your probability there, as you can see with those, is going to be around 16%, or more specifically, the 15.8. And again, you can see now if you're going to be 2 standard deviations away, you can see that the probability there, 2 standard deviations away or lower, you can see you've got your 2.2%, so 2 standard deviations away or lower. So you can see, less and less probability of being that far away from the mean. And of course, you can do it the same, the other way around, just obviously observing how you would actually calculate the percentage. So we're looking to find out here what the probability would be if we're 1.47 standard deviations away from the mean. So we just look it up. So we've got the 1.4, and then we would want the 7 as well. So we've got the 7 here, and then we've got the 1.4. And we can see here that there is a 7% chance that we would be 1.47 standard deviations below the mean or lower. And that kind of makes sense when we kind of look at our graph, because we'd already said, probably about 5%, halfway through it would be on this half, plus those. So that seems like a reasonable answer. So using our normal distribution tables, we can see that there is a 7% probability of 3.8 million contribution or lower. So therefore, we could work out there's a 7% probability of making a loss. So we said Manchester follows normal distribution. 68% of values are between 1 SD below the mean and 1 SD above the mean. Can use Z-score and normal distribution tables to calculate probability of making a loss. And then we could put here 7%, or we could just put it up here. There is a 7% probability of 3.8 million contribution or lower, and therefore there would be a 7% probability of Manchester making a loss. So then we'll have a quick talk through the next part of the question. So we then could look at the same thing with London. So again, we've made some of these points already, but then we could think with London, does this follow normal distribution? So again, we're told here, now the question may just tell you it's normally distributed, and then you can know that you could calculate the probability, or it might, like this, give you some information about the data. So we're told there's a 50% probability that contribution will be between this and this, and we're told what the standard deviation is. So again, we've kind of got the means here when we're looking at London. So we know we've got the mean here. Now, perhaps it isn't immediately observable because they haven't given us something, 68% probability or, 95.4% probability. They've just told us, okay, well, this is the mean, and then we've got a 50% probability, which isn't, directly observable, depending on how you've got your information laid out in front of you. So Another way we could kind of test this data is, again, continue to look at, the Z-scores. So we've got the mean contribution. We're told there's a 50% probability of it being between these two. So we could think, okay, well, if it follows normal distribution, what would be the probability of contribution being between, this and this? So we can see clearly this is below the mean, the first one. So again, just as we have done here, we could think about this London data. So we know that the mean for London was the 7867, and we know that the standard deviation for London was 1078. And the first outcome we're looking at, because we're told 50% probability, it would be between this, so 7140. That's one outcome we're looking at here. So if we take the outcome and minus by the mean, we could then see how many standard deviations this outcome is away from the mean. And of course, the other outcome that we're looking at here is when it would be above the mean, so 8560. So we can see that there's a 50% probability it's going to be between here and here. Now we know that this is the mean, so we've got our, let's just call it our 7.8 million here, which is the mean for London. Now we could work out the probability of it being this amount. So we're clearly looking at below the mean here. Now when we look at how many standard deviations is this below the mean, of course this is the difference from the mean divided by the standard deviation, we can see this outcome is 0.67 below the mean. So we could work out, okay, what's the probability of it being either this, or lower perhaps, or we could look at it being this or higher. So if we again look at our Z-score, so we've got a Z-score of -67 here. So 0.67, and this is one we've used as one of our hypothetical examples. So we can see the probability of it being 0.67 standard deviations away from the mean or lower, so between here and here, we know the probability of that is 25%. So therefore we know there's like a 25% probability it'll be between here and here. So we know there's also a 25% probability that it would be between here and here. So between the mean and 0.67 standard deviations below the mean. Because you've got the mean, we know 50% of values are below it. So we know if we look at our distribution tables, we can see that there's a 25% probability it'll be this or lower. So you can see as you get further and further away, the probability of being more than 2 standard deviations or lower is really low. So just kind of sense check and make sure you're kind of comfortable with how these tables work. So we know there's a 25% chance it's going to be here. So we know there's like a 25% probability it'll be here as well. So between here and here. Now, if we look at the other outcome, which of course is above the mean, you can see actually we've got the same difference here. There's a 50% probability it's going to be between here and here. So this is the other outcome we're looking at, and the probability of it being, again, we've got 0.67 standard deviations this time above the mean, and we've actually got exactly the same because it's 0.67 standard deviations above the mean. So we've got a Z-score this time a positive 0.67. So you've got the Z-score here. So again, when you're looking at the positive numbers, just kind of sense check and think, okay, well, what is this actually telling me? Well, we know the probability gets lower and lower the further you get away from the mean. So we can see here that what this is telling us is a 25% probability it'll be between here or above the mean. So again, it's actually, because it's the same Z-score, it's just this time we're looking above the mean rather than below the mean. So again, there's a 25% probability it'll be between here and here. So therefore, there's a 25% probability it'll be between here and here. So therefore, again, you can see that this data follows normal distribution. However, it was harder to work, this one out, because we know there's a 25% probability it's between this and the mean. So 7867, we know there's a 25% probability it'd be between here and here, and a 25% probability between here and here, and therefore a 50% probability between here and here. 25 between here and here, 25 between here and here, so therefore 50% probability, between the two, as we've said there. So hopefully that's clear, and therefore you can see that does follow normal distribution. So therefore, because it follows normal distribution, we know we can just use our Z-score to calculate a particular outcome. And this time we're looking at London making a loss, and the fixed costs there would have to be, so the contribution would have to equal the fixed costs. So the 6.4 million, we've got this as the mean. So in order for London to make a loss, we know that it'd have to have 6.4 million of contribution, which is 1.36 from the mean. Maybe I'll just use a different color here. So 1.36 below the mean, so 1.36, probably kind of about here. So again, you might want to sense check that. So we'd expect it to be higher, of course, than Manchester, because that was when we looked at the Z-score there for Manchester, that was further from the mean. This is a bit closer to the mean, so you'd expect a higher probability here. And if we look at minus 1.36, so we've got 6 here. So we can see there'd be an 8.7% chance of London making a loss. So, 8.7%. So then you could, make very similar points, but we could kind of say what we said before. So we could say, London also follows normal distribution, and maybe just kind of show our workings there. As I said, sometimes the question might tell you it follows normal distribution, and therefore you haven't kind of got to work that out yourself. And then we could say, the probability of, London making a loss, would be this. And of course, we'd copy all of our workings over. And then we'd have our, workings there. And then we'd always want to finish off with a conclusion. So I think it's important to appreciate that statistics could pop up in different types of questions. It could be in a proposal evaluation question like this. It could be in an MPV, investment appraisal, discounting the cash flows type question, as we've seen it come up before. It could be in a performance analysis type question. So there's different areas where you might need to consider statistics. But I appreciate that was very technical on that statistics part, but I think it's really important area to understand for your exams in 2022. The examiners have commented, this is going to be something which is going to be examined, more frequently. If you look at the recent exams as well, you'll see that it has been examined frequently, and there was a reference in 2022 in the comments to saying how the exact probability could be calculated, and how this will be expected in the future. Sorry, that was in the November 2021 exam. So definitely worth looking at those comments there, those examiner comments there. So we've looked here, at statistics, we've considered that. Something else you can consider doing is flexing the numbers. We probably don't need to do that in this question. We haven't really questioned any of the assumptions. We didn't have many assumptions kind of going into it. With, of course, you could look at break-even analysis, but not in this type of question, because we don't have like the contribution per unit or anything like that. So that isn't really relevant. So again, it very much depends on what's relevant to the scenario. If we thought about our mark allocation, we'd definitely have enough, I think, for this type of question. But you could think about having some other strategic and operational issues. So you could think here about things like the growth potential. Is it a growing industry, etc. You could think about exit costs, so high fixed costs, of course, with opening a store. You could think about some operational issues as well, perhaps, but only bringing in points which are clearly directly relevant. And we've already thought about a lot of these. Could think about the brand, the reputation, and things like that. But it very much depends on the scenario. But like I said, we've already got a lot of points here because this question focused heavily on statistics. And then we always want to conclude, with a reason as to which course of action to take. So of course, if you think about our conclusion, which one should we go for? Now, of course, remember, in a scenario, the FD said he was particularly concerned about the probability of making a loss. So a good conclusion would be to say, choose Manchester because it's got a lower probability of making a loss and fewer fixed costs, because these were the concerns of the finance director. So that would probably be the right approach to take. And then you could maybe say, if Manchester was successful, then launch London after. Another good, recommendation to make is suggesting doing more market research, particularly because we said some of the data was perhaps flawed or biased. So we could maybe mention that. So you could say, more research to include, loss-making stores, perhaps, and possibly, to ascertain customer demand, possibly as well. So just have a brief conclusion. You don't need to overdo it there. And it's always worth just checking back to the requirement to make sure that you have answered everything. Which of the 2 stores should be opened? Well, we said which one. Obviously reasoned advice, because we've looked at the profits and we've looked at the numbers and the risks. We've considered financial, so looking at profit margins, future revenue, but also non-financial, like the statistics area and the risks around that. And we've addressed the concerns raised by the FD. So we've made sure we focus very carefully on that requirement wording, answered everything the examiners asked for, and used the scenario as much as possible. I haven't just kind of used this as a general list of points to, include. I haven't just gone through and put, consider customer power and things like that. I've only brought in points which are relevant to the scenario. I haven't talked a lot about revenue because we don't have the revenue numbers. I haven't even mentioned cash because we don't know anything about cash. But I focus, a lot more on statistics because the examiner has given us information about the data and therefore expect us to use it. I've calculated the profit margin because they've given us the fixed costs as well. So we've kind of looked at the profits there, or the or looking at it as a percentage of the contribution. So again, we could, I guess strictly that actually isn't a profit margin, so it's a percentage of the contribution. So we could just put here profit margin. We could just put here operating profit as a percentage of contribution. So we could put that there. I guess strictly speaking, it isn't a profit margin because we haven't used revenue there. But again, I've used the information as much as we can in the answer. Thought about the operating gearing because that's particularly relevant to this question. Question the data and the underlying information there as well. And then, of course, use the information and been led by the examiner by the information that has been given there on statistics. So hopefully that's kind of quite clear how you'd approach, SBM exam questions in order to score lots of marks. So what we'll do now is we'll just have a bit of a chat about how to approach the SBM exam kind of generally, and in terms of your preparation in your months leading up to the exam. So as I've said, the SBM exam will have different question types. As I said, when you actually look at the requirements you face in the SBM exam, you'll see that you have different question types. So as I've mentioned before, have some on data analysis, and we've seen some of those there. We've seen one on statistics. You'll see some on performance analysis. We'll have questions on financial management, and we've seen some of those in this question. because of course there's the investment appraisal one, there's also the financing one as well. So again, you can break each question type down into subtopics like financial management, break it down into investment appraisal, break it down into finance, break it down into valuation, financial reporting, assurance and ethics. So break the exam down into the smaller question types and then take that even further and break it down into topics. And to get a good idea of how you might do this, if you have a look at how our SBM course is structured, so this is on the ACA Masters website on the SBM page, you'll get an idea of how to break SBM down. This is how we break it down. So you've got your data analysis style questions, your FM style questions, your FR based questions, assurance and ethics, and business strategy type questions. And you can see you can break it down further, as I said, investment appraisal, finance, equity valuation, hedging. So you can kind of break each question type down into smaller subtopics. It makes SBM so much more manageable. So what you need to do for each topic, so maybe we'll take statistics as an example, you need to understand the key technical content and prepare summarized notes for use in the exam. So make sure that you understand this key technical content. You've got the ICAEW workbook. Those of you who are using, my video class, my video course, or the live classes, and obviously you've got the video on statistics where I explain the key technical content so that you can understand it. So it's really important that you understand the key technical content first of all, and then once you've understood it in detail and you've thought about how the summarized notes work ready to use in the exam, and you've understood all of these key points and decided what you're going to memorize and what you're going to actually look up in the exam, then what you should go and do immediately after covering that topic is go and practice lots of questions on that topic. So what this will ensure is that you're actively testing yourself in an exam scenario. You've just been through statistics, you've understood it, you know what standard deviation is, you know what coefficient is, you know how probability distribution works. What you need to do immediately after is go and practice some questions. Yes, there are some small worked example questions in the workbook, but you want to go and practice exam questions. They're the best ones to practice, because then you're actively testing yourself. So you're actively testing yourself on that knowledge you've just learned, but you're doing it in the actual scenario in which you're going to be examined. So then you should go away and practice several questions, one after the other. So after this statistics class, you could then go away and practice these questions, because these questions all examine statistics. In terms of the financial appraisal part, you can go away and practice these questions. So after going through statistics and after this class, you should go away and practice these questions so that you can kind of see how it comes up in the exam. You can work on your exam technique. So of course, on that exam technique that I've just kind of demonstrated here, short, concise range of points, making sure I'm answering the requirement wording, making sure I'm using that exam paper information as much as possible in my answer. So you're actively testing yourself on that knowledge you've just learned, but in the actual exam scenario, and you're working on your exam technique at the same time. Question practice, exam question practice is absolutely crucial. And then move on to the next topic. So then you can go and watch a class on performance and position analysis. And again, I explain the key technical content in a nice, easy to understand way. I'll work through some questions. I can show you the exam technique to use. You'll then have your notes so that you have all the key points covered. So you've kind of got reminders of what to include when you're doing your analysis. So number, reason, further insight, context, when you're analyzing the performance of a business. Once you've seen me work through some questions, you can then go away and practice several questions yourself, and you're just practicing that exam technique whilst testing yourself in that exam scenario. And then one by one, you'll go through SBM, just mastering one topic at a time. You can just gradually cross them all off and then just work through them all one by one. So you can finish the data analysis, then move on to FM, investment appraisal, again, understand the key technical content, see me work through some questions, and you go away and work through some questions as well. And breaking SBM down one topic at a time makes it so much more manageable. So a few tips when you are practicing questions, and of course on exam day, and when you're practicing questions, it effectively is like exam day, a mock exam day. So you should be doing them under exam conditions using the software. So make sure that you allocate your time. As I said before, it's really important you attempt every question. I mean, you don't have to, it's not like case study where you have to pass each question individually, but the reason you should attempt every question is because, as I said earlier, there will be easy marks on each question. Now, wouldn't it be a shame if we spent all our time on these first two and then we didn't get to the ethics part, where, to be completely honest, I generally think ethics is relatively easy marks in most exams. It's definitely harder at advanced level than it was at the earlier level, but all the other marks are a lot harder as well. So actually it probably still is relatively easy marks, and it's worth 8 marks, which is quite a lot when you only need 50 to pass. It's going to give you 16% of the marks you need to pass the exam if you get it spot on, which isn't too hard to do. So you need to allocate your time so that you get to attempt each part of the question. And as I've said, that will enable you to get the easy marks on each question. So as you saw me do there, make sure you use a scenario to answer the exact requirement. So read the requirement very carefully, make sure you answer each part of it. But then when you're generating points from your answer, use a scenario as much as possible. You saw me do that. I referred to their customers as being high income, and therefore that's why London might be more appropriate. You saw me using this number here to calculate how significant that those two retail stores would be, how much profit they're going to add. So looking at their relative size. So you can see I'd use that scenario as much as possible. Two alternative sites. I use this, the 9% versus the 14%. Again, another reason to use London. I've used all of this information, the contribution, the probability, the standard deviation, in my answer. I've addressed the concerns by the FD. I've used every part of it. I'm always trying to use that information as much as possible in my answer. And that applies to all ACA exams, really. But particularly with the topics which are less technical, so like the business strategy type questions. So as I said, make sure you kind of cover all of the transactions and all of the issues. So don't just have Manchester or just have London, because you're going to limit yourself to the number of marks. You want breadth really rather than depth. Even if I was really comfortable in London and could have done loads more analysis on it, I'm making sure that I've kind of got a balance to my answer. To if I cover everything, my approach is always I'll get marks for everything and kind of get a good spread and get the easy and the medium marks on each area. So there's usually some headroom marks. So you don't actually always need the hard marks to pass. There were some really hard marks in this question. I think the London bit, working out it was normal distribution was quite tricky there. But even if you didn't get that mark, so if this question was, for example, worth, 15 marks, it would usually be, maybe 17, 18 available. So you can get a few marks wrong and still get full marks. So that's just important to appreciate. And then I'd use the notes for, quite niche areas or technical areas. Probably Z scores. I mean, obviously you're going to need to use them for the normal distribution tables, but I'd certainly be using them for the more technical parts, things like financial reporting, hedge accounting, lease sale and lease back, for example. Really technical areas. I would definitely be using them for parts of financing and hedging as well. So probably the more technical areas I'd be personally using the notes for. Because just remember, every time you're looking something up in the notes, that's time spent, which could be spent typing a mark scoring point. So you do need to kind of decide in advance what you're going to use the notes for. So in terms of other resources, I hope you found this event useful. In terms of other resources that we have my video classes available. As I've explained, they cover every SBM topic, every SBM exam question type. So I explain the key technical content in a nice, easy to understand way. And then I'll work through some exam questions like I have today. Today, I've just worked through the exam questions. I haven't really taught you the technical content, but I do that during the classes. I work through some exam questions in the video classes. And then we've also got the Saturday live classes available as well. So they start next Saturday. And I'll just be working through even more questions in those. So prior to the class, you'll watch the video in advance where I explain the key technical content, for example, on investment appraisal, and I'll work through some questions. And then you'll come to the class and I'll work through even more questions. And then you go away and practice the other questions so that you master them one topic at a time. And then we've also got our SBM materials available down here. And these are the notes you've seen me using today in the exam. So they cover everything: financial management topics, financial reporting, and then like the statistics, business strategy, assurance. So everything that you need for the SBM exam, and they're what I use to answer exam questions. So one of the classes from the video course can be viewed on our website. This is available to all ACA students. This is free of charge. You can watch me. There's a couple of actual free classes on here. So we've got one on financing, so FM financing. So definitely watch that, because that's a topic where you can use some of the functionality in the spreadsheet software. And you can also watch me work through a recent exam question in full. So doing the full question, obviously that's quite a long class because it takes a good few hours to work through the question. But that's a really useful one because you get to see me, read the requirements, how I allocate the marks, how I answer multiple parts of the question at the same time, the writing style, how to use the notes. So you can see me work through full question one there. There's also my LinkedIn page and the ACA Masters LinkedIn page. So if I don't have you already, please feel free to connect with me on there. I usually post some free exam tips and some free resources as well. So make sure you don't miss out on those. It'll be nice to connect with you. And then our blog on our website has an article as well on SBM. So we've got a blog there on SBM on our blog page. And then we've got some other videos about how to prepare for your SBM exams, with some advice on how to set up a study plan. So we've got that down here. So some exam preparation tips. I talked about a bit of those today, but there's some more useful pointers on there as well as our YouTube channel. So I really hope that you have found this useful today. I'd really appreciate it if you wouldn't mind just filling out a quick poll so we know whether it's worth running more of these events in future and how perhaps to tailor them. So I've just launched that. So if you could fill that out, I'd really appreciate it. And then we'll have some time for some questions. Okay, thanks very much for filling that out. So does anybody have any questions? Feel free to unmute yourself and ask aloud or type them in. So it can be about SBM, how you should be approaching it, the exam technique to use, questions about any of our resources.
Hi, Kiwi.
Hi there.
Yeah, I'm Vishwa.
Hi Vishwa, how are you?
I'm fine, all good. Yeah, I have a question regarding the pre-populated data.
Yes.
How do we there's a lot of data in the workbook, but there's no link for the data like on the spreadsheet. How do we then practice those questions?
Oh, so how do you practice it in the ICAEW software?
Yeah.
Yes, you can practice them via the ICAEW website. So there will be some mock exams for SBM, which I expect, similar to FM and BST, will have the pre-populated data in there. But you should be able to access the questions via the ICAEW website.
Okay, but there is no question for SBM. It's only BST and FM.
It might be that they haven't uploaded them yet because we're still waiting for the mock exams, but they will be there. You will also notice that some of the examples in the workbook are the same or very similar to the FM and BST ones. So the FM and BST ones are a good source of practice for now, if they're the only ones which are available now. And then when the SBM ones become available, then obviously they're slightly better ones to use. But it absolutely is worth you practicing with the BST and the FM ones, because some of the questions will be quite similar in nature. So you'll see some of the performance analysis questions will be looking, so some of the pre-populated questions will be looking at performance analysis, for example. Others will be looking at investment appraisal. So some of the BST ones will be, you know, like these ones, like these SBM questions, where you've got the pre-populated spreadsheet questions on performance and position analysis, or on, you know, investment appraisal. Those will be like the FM ones. So they are a good source of practice, the FM and the BST ones, but there will be SBM ones coming. There will be SBM ones available in the not too distant future.
Okay. And have the mock exams been available now?
No, they're not available now.
Okay.
But
I have purchased your course, by the way. So
excellent. Yeah, so you would have seen me work through some of these questions. So yes, it is the case that we do have access to some of them.
yeah.
But they'll be available to ICAEW will make them available to students shortly.
Okay.
But once they are, the mock exams will be uploaded to the course. So you have kind of like the PDF documents there as part of our course, but you should practice it in the software. You are right. You should be practicing it on the ICAEW software.
Yeah.
But if you haven't got them by the end of, you know, this month, then we'll certainly follow up there. But I expect to see them available shortly.
Okay, thank you.
Thanks, Shiva. So one of the questions was, will the recording be available later? So yes, the plan is we will make the recording available later, and we'll put that on our YouTube channel with the others. So one question is, are we allowed to take our study materials into the exam? Absolutely. So these are designed for you to use in the exam. I use them when I do every question, whether that's SBM, CR, case, or BPT. But absolutely, these are specifically designed for you to use in the exam. Short, concise, reminders of the types of points, you know, to include, you know, for each topic, you know, as we have seen there, as we of course saw, you know, with statistics, you know, with a good example there, you've got lots of kind of like reminders of the type of points to include there in your answers, as well as the key technical content. So really good question there. Do I have any tips on how to self-mark questions? It's sometimes hard to know what would be a half mark and what would be a full mark. Absolutely, yes, that is difficult. It isn't really as simple as kind of saying, you know, one good point, 1 mark. Obviously, we have access to the more detailed mark plans, which aren't available for students. But what I would generally do is look how many kind of marks there are available in the question, and you can kind of see how many different points that the examiners, you know, have made. Now, I appreciate that when you look at the answers in the back of the question bank, then of course they're very detailed. It's very chunky paragraphs, and that isn't the way that I would suggest that you structure your answers. I don't suggest that you have kind of big chunks of paragraphs like this. You need to be concise. You haven't got time to produce that in the exam. So you need to be concise, you know, short, concise, try to cover as many kind of different points as you can. Don't be too brief. I'm not saying write in bullet points, you know, write in full sentences. But if you've got, you know, kind of a point and they've taken up a paragraph to put it, but, you know, they may have kind of these 2 points in there, then it's not quite as simple as saying, you know, a mark per point, but that might be kind of a general guide to kind of start you off. But yeah, I do appreciate it is quite difficult. So the next question, do you have any advice for people who are studying all three? Yes, absolutely. So I think what you need to do is set up kind of a study plan, and we've got some advice on that here on the exam tips page. So we've got one here for CR and one here for SBM. I think you need to identify all the different topics, all the different question types, and build a plan in your calendar of which topics you're going to tackle on each day. Like I said earlier with, SBM, break it down into, the smaller topics, one topic at a time, so you can kind of break it down into topics as we have done on our website for the video course, and then just allocate a topic, to each day and tackle them one at a time. But certainly have a plan of which topics you're going to cover on each day. Do you have any advice on split our time between CR and SBM? Yeah, so quite a lot of that is covered in those videos I just referenced there. What I would say is really important to appreciate is that there is some overlap between the two exams, the obvious one being, financial reporting. So when you're building your study plan, I'd suggest, when you're going to do assets, for example, for CR, then it makes sense to look at some of the SBM questions as well and attempt some of those. Particularly with like financial instruments and hedging, when you're covering that for CR, looking at the financial reporting treatment questions, do some SBM questions as well at the same time. So try to kind of, leverage the overlaps between the two. But those videos on the website, cover it in more detail, how to prepare for the two separate exams. But I would probably weight it slightly more towards CR, but not significantly, maybe 60-40 as a maximum. So one question is, somebody's failed by 1 mark and wondered whether the course content has changed from November. Yes, it has. There's been quite a few changes. There's obviously a lot more on statistics. So there's various new questions. The statistics questions are new. The pre-populated spreadsheet class is new. And there's been quite a few updates to other classes, like source FM financing. You can use some of the spreadsheet functions there as well. So quite a lot of it has changed. If you were using the course previously and your access has expired, please send an email to ACA Masters and my colleagues will get that extended for you free of charge. So good question about the distribution tables. Haven't seen them before. So I think we might look to put those on my LinkedIn page in the future, so you'll be able to download them. So it does say in the workbook that it's possible to calculate probabilities using the Z-score and distribution tables. And as I said, if you look in the November 21 examiner's comments, they did say that in 22, the students will be able to calculate the exact probability. And if you look at the statistics questions, there's a lot of mention and a lot of reference to distribution. So it might be that they just tell you that the data is normally distributed, and it falls between kind of here and here, and therefore you could work out the probability of it being more than 2 standard deviations below the mean. So it might be that you might not need to calculate the Z-score, but it does include that in the workbook. It does reference normal distribution tables. You can get hold of them very easily because you just Google it and they're kind of everywhere. And also there's those examiner comments as well. So I would bring them in to the exam. So the question is there a way to access the question bank if it's not on your ICAEW bookshelf? That's probably something to contact ICAEW about on there. So one question is, can you purchase the materials? If you're referring to our materials, then yes, they can be purchased at the bottom of the page. You can just purchase those separately there. So is there a date when you need to be technically ready by the exam? So I don't really break it into, learn the technical content and then do lots of questions. I think I much prefer doing it simultaneously. So like I said, I take it topic by topic. So, you know, statistics, cover the technical content, so I'm exam ready. First time I go through it, I get to the point where I'm exam ready, and then I practice lots of questions and I know I've got that topic covered. Obviously, you come back and visit again before the exam, but what I don't suggest you do is kind of just go through all the technical content so you understand it and don't even look at exam questions. And then, you know, sometime after, then start doing questions. I think right from the off, you know, break it down into a topic, cover the topic, understand the technical content, but then immediately start doing exam questions. So then we've got booked on a live course. Will I get details of the Zoom invite soon? So we sent out the class confirmation email a few days before each class. So you'll get that. That's on the course structure document that you were sent. So you've got the class dates, class times, and an explanation of when you'll be sent the class confirmation emails and links. So yes, you'll be getting those shortly, and the classes are recorded. Yes. How much of the question bank should we aim to do? Well, I think with the question banks, focus on the recent exam questions. But for CR and SBM, you absolutely should have gone through all the past exam questions. Just bear in mind that all the questions in there are past exam questions. So you've got the ones with a date next to them, which are the past exam questions. So how much should you focus on the workbook content if you're also using our course material? So, you know, in my classes, I teach you, you know, the key technical content so that you understand it. And then I work through some exam questions. So I focus on, you know, the key content that you need to understand. But the ICAEW workbook is really useful because it just gives some further explanation of, you know, concepts and content. So, for example, distributions, you can go back to the ICAEW workbook, and I think after attending my classes, you'll then find it easier to understand the workbook. I appreciate it's quite dense, and obviously just reading text, it can be quite difficult to get your head around. A lot of people understand more kind of visually and when things are explained verbally to them. But it's a good resource because it's a comprehensive resource. So if you need further detail on it, it's got some useful worked examples. But obviously don't kind of get too bogged down in it as well. So it's useful for further detail, but, you know, don't get kind of too bogged down by it. But at the end of the day, it's, you know, the examiners have reviewed that and approved it. And that's, of course, you know, forms the basis of the syllabus. Okay, brilliant. So lots of good questions there. Good to see you all engaged, and yeah, thank you all for attending. I hope you found that useful. Like I said, there's lots of other questions available on our website, so you can watch me work through some FM finance questions. I'll show you how to use some of the functions in the software there. Obviously, I use Excel to maximize the screen, etc. But you should practice all your questions in the ICAEW software to get familiar with how the functions work there. And then we've also got the free sample class of working for a question in full. So you see me work through lots of different types of SBM exam questions. So thanks very much, everyone, for joining. I hope you found that useful, and follow that approach of one topic at a time, understand the technical content, practice lots of questions, and you'll soon master SBM one topic at a time. So all the best, everyone, and look forward to perhaps seeing you again at the CR event next week.